Good evening, TheoTrade. This is Corey Rosenblum bringing you your Thursday night Theo Nightly video for July 5th, 2018. We're planning for a volatile Friday, July 6th, and I'll tell you why. There's two main events, or two big fundamental factors that will affect our trading session on Friday. The first is going to be the trade war. The U.S. is going to announce, or at least take into effect, at midnight, tariffs on Chinese steel and Chinese aluminum. And China has promised to retaliate with specific and targeted tariffs to U.S. companies, U.S. imports, and U.S. exports. So we'll see how that plays out. There could be a global effect meaning affecting the S&P directly, the Dow futures, Nasdaq, etc., the indices especially, or, I think more importantly, any type of announced targeted trade tariff war could affect individual companies. We'll take a look at Harley-Davidson and the most recent effect from things that the EU talked about there. With not to mention, it's not just China, but the EU. But we're mainly looking at Chinese tariffs triggering officially tonight and rolling over into the morning for the morning open. But then again, possibly nothing could happen. But it's just something to take a look at for a potential volatile Friday session. The next factor is going to be the jobs report. We call it the non-farms payroll. Takes place usually the first Friday of the month. Being a little holiday week here, it will take place Friday. It takes place tomorrow when this video is being produced. So it's going to happen Friday before the market opens. 1 hour before, to be specific, 8:30 Eastern time. So we'll take a look at that number, but it's not enough to forecast out the number. It's what the market will react to it. Looking at consensus, the consensus is for a slight decline in the non-farm payrolls. Prior report, 223,000. The consensus is about 190,000. So if there is a spike above, let's say 223,000, that will be a positive surprise. If we're under 150,000 or less, that could be a negative surprise. But the consensus is for just under 200,000 new non-farm payrolls jobs to be reported. Also, the forecast is for the unemployment rate to remain at 3.8%. If there is any change in that, higher or lower, that could spark a rally, create a breakout, or send us flying down away from our resistance pivots. So news being front and center tonight, midnight, and an hour before the market opens. Let's always be sure to take a look at what those are before we start our trading session, but we can even keep it simpler. As we discussed on the Tuesday night video, we are still within our trading range barriers. We had the video for the range breakaway, and neither of those scenarios have happened. We've not seen the breakout. We've seen this continuation inside of our trading range. So we'll continue with that logic. Again, a lot of things will happen before Friday's open. If there is a big opening gap, it could be a catalyst for a trend day, especially if this market can gap above, and the S&P levels, we'll reference all the levels, get a good high volume gap, confirmed with high internals, above roughly 2745, maybe 2750. That could trigger a trend day up to 2760, 65, 70, ultimately the prior highs. Maybe 2780, maybe not in one session, but don't count that out. And in the Dow futures, look for 2435, roughly 244,400 here in the Dow futures. Our Nasdaq is just shy of 7150. Right now it's 7125. We have a 50-point range here and a 50-point range there for a 100 just about trading range in the Nasdaq futures. And that'll be the spot to go from there. Open air gap, not much above the market, which means just like the S&P, that could be a catalyst for a trend day or some rapid upside expansion. That is, if that occurs. Right now, I would suspect, granted, the news reports are going to be there before the market opens, so we'll have some clues. But just looking at this from a price perspective, the thought process is that this trading range, as it has remained for the month of later June into July, to continue. So if that happens, all things being equal, we would look for the market to trade down away from 2740, maybe 2745, down away from 7125, and then down away from 24400. And the Russell notwithstanding, because it is not necessarily in a similar looking trading range. It's much more wide. Its levels are 1680 and 1630. So that's the bullish breakout. Things are going well. The trade war didn't happen and the jobs report was better than expected, or some combination thereof. Bullish upside short squeezed play. Otherwise, if things do go wrong in the news, in the unemployment rate, in the non-farm payrolls, or in the trade war, or other factors that we just don't see right now, but we expect a volatile Friday, then we'll see the departure from these levels. Once again, with respect to the trade wars, individual companies may be affected more than the stock market, and you may see large gaps, unexpected, maybe inexplicable gaps in stocks like Harley-Davidson, because that stock was hit with a tariff and they announced, of course we don't know if that's going to take place and fully go through, that they'll be moving overseas for some of their operations and production. Because it said that essentially with the trade war, the European Union, that Harley-Davidson would cost about 20% more to import into America. And so that's a targeted tariff that affects a specific country, essentially to put political pressure on the government. But nonetheless, we don't care necessarily about news and items and things like that, certainly not politics. We just care about price movement. And all we know is that Friday and beyond, in this environment of the trade war as it escalates, or if it escalates, could put random price movement, rapid price movement on individual components. All that means is there is high risk in certain stocks, especially those that could be targeted by retaliatory tariffs from China or in the EU in the future. So just be careful as we go through. Might affect grain or agricultural stocks, might affect, they've talked about bourbon and whiskey and little imports like that. And of course, Harley-Davidson, which is a headline stock that's getting a lot of attention as a victim of this trade war as it continues. So again, individual stocks could be under fire for random, rapid price movement or just high volatility based on headline news. But we'll still keep it in this context of the market, of the jobs report, and of the potential bullish upside breakthrough pathway from 2745, maybe 2780, all the way to 2800 if we're above. That was the breakout scenario from May, and we're going to see if that again happens into July here. We don't think that will happen in one session. In fact, that will be extraordinarily unlikely, right? It took 1, 2, 3, 4, 5, 6, roughly 7 days to push 50 points higher in a range expansion breakout. But if we get above this, we can't be biased. That would be an upside short squeezed bullish breakout event. Otherwise, if we can sidestep, if the market looks past and says trade war, what trade war, right? Keeps on going sideways. Or if the jobs report is neutral, in line with expectations, or otherwise doesn't disappoint the market, we might see the market trade within this range until we get a future breakout. But as for now, and tonight, Thursday, planning into Friday, just know that Friday has a little bit higher risk than a normal session. Be careful, TheoTrade. Note the levels, note the expectations, and have a plan to trade the immediate departure from these levels, depending on what market, time frame, and strategy that you trade. Be safe. Take care. This is Corey Rosenblum with the July 5th TheoTrade Nightly Video.